E2 3 ports down. They didn't hold 59.40. We dumping? It's not a good sign. So I think we closed pretty close to where I expected. Not quite as low. I'd said like 59.28. So almost got it. But yeah, not a good sign. Not a clear rejection off of gamma neutral. We still need to lose 59.20 or 59.05, but doesn't look bullish. Not a very strong signal. Especially with the low close into end of day. We could get some more weakness tomorrow. A loss of 59.05, probably pretty devastating for the bulls that came in on the PPI report. It was a pretty big downside gap there. So yeah, that's interesting. On the longer time frames, looks like starting to look a lot like another bear rally. Obviously, a breakdown of 59.48 would help confirm that. But losing 59.80 is at least minor support lost into the end of the day. A breakdown 59.48 would be confirmation of a breakdown from the local high and reopen that like 5,800 test. Dollar down a little bit today, not very much. Still holding pretty close to 109. Yields fell throughout the day, but started to turn back up a little bit towards close. The 10-year is still above 4.6, although it's given up some ground. We could definitely see those move back up with heightened inflation expectations. Don't forget that oil's still quite high at 77 a barrel. Commodities pretty flat. I know nat gas was up quite a bit today, but I think everything else kind of just moderate. Henry Hub. Yeah, nat gas climbed 5.68% today. So that's kind of neat. Correlation started to turn around a little bit into the end of the day. I had noted earlier that it looked like it was bottoming out. Still hasn't swung back the other way, but as we move into this expiration, there's a very good chance that we could see a lot of the correlation or a lot of the dispersion trade in the index break down because this is kind of the big expiration for like single equities, the leap expiration, and so it's very possible that a lot of those big dispersion trades may not come back in given the uncertainty moving forward with the BOJ decision, with Trump's inauguration, all of that coming next week. Carry trade leverage down from 9.5x to about 9. Forward yield on volatility turned back up a little bit into the end of the day at negative 4.55. Still not positive, but it's about a 2% increase from its intraday low. We are seeing a little bit more action in the short end of the carry, but not a ton. We want to see all three of those de-risking, and if we do, that's probably very, very bad for tech. Bond volatility fell yesterday to 93, in line with the drop in correlation. Slight turnaround today probably won't make much of a difference, but bond volatility definitely didn't pick up much. Skew dropped yesterday after the big spike. I would say keep an eye on this tonight. See if tonight's print, which should come in about, I think it's like 11 minutes. I can't remember if it's Chicago close or 4:15. It's one of the two. Anyway, if skewed continues to drop here, that might be an indication that this bear rally is kind of coming to an end, and we might be getting set up for another leg to the downside. Breadth stocks over the 20-day moving average hit a high of 66 today. No, this is yesterday still. So probably a bit more under the 20-day moving average at the end of day to day. ES is down about 25 points. RSP was still up though. Yeah, it's possible that we don't really see breadth fall off too much here. Correlation between VIX, cash VIX, still moving up. Now at 70%, higher than the prior high, where it hit about 67, 68. Before kind of letting loose. And we still have like a pretty consistent like trend of higher and higher vol over time, and this is kind of indicating that. So we're not seeing volatility get back down to those like 14 or 12 levels like we were seeing before on the VIX. And it's it's harder to sustain these short vol positions, especially with the indexes below gamma neutral. So as the correlation continues to rise here, the chances of volatility spiking are going to go up. Fed fund futures still about the same, less than one rate cut by June. I will say that the bear steepener did pull back a little bit. I think it was 38.2 earlier, 37.4. So kind of flattening out. I mean, it's not really turning around or anything, so nothing to worry about there. Out here on the daily for SPX, we tested twice now. We've tested the 50 MA and rejected off of it. We closed right above the 30 EMA. Failure there definitely opens up the downside move back to fill the gap, like 58.72, 58.71. And then, once that gap's filled, if there's no additional support, I would say a continuation to the downside, maybe a retest of like 57.74 or lower. German, thank you so much, dude. That's about it for today. Oh, for U.S. 10-year at 4.62, earnings yield for the S&P at 3.29. Anyway, that's about it. Thank you guys so much for tuning in. I will see you bright and early tomorrow or tonight at our fourth quant roundtable, where you guys are feel free to drop into the Discord and chat with us and ask some questions about our upcoming product, Gamma Strike. See, I can do it. All right, later, guys.